JB here. Hope everyone's doing outstanding. Monday, July 28th, 8:57 a.m. on this last week, trading week of July. August 1st is Friday. Very, very busy week. Pretty much similar to last week, right? We have lots of stuff. Fed meeting starts tomorrow. Fed statement and press are 2 and 2:30 on Wednesday. So that'll be a big event. Expectations 0%, well, not zero, like 99% probability that the Fed's not going to cut rates. And then you just got to hope that Powell's dovish. I think if he does that, it kind of eases concerns. Market holds up okay, right? If he cuts rates, I don't know. There's going to be volatility. Some will cheer the news, some will not. That would be a big surprise. And, surprise is not good when it comes to the market. So hopefully that's not going to be an outcome. And then there's a lot of stuff this week, right? So, uh, we have the second quarter GDP that comes out Wednesday morning, PCE data Thursday. I don't know if that's going to be as big a deal, but obviously, if it ticks up hotter than expected inflation, that'll not be good. But then you have to think that's after the Fed meeting, so that bodes well. And then also on Friday, we have the July jobs report. So, I mean, even myself, two jobs reports ago, I thought at least there'd be some weakness in the jobs numbers, and it has been anything but. I mean, last jobs report was a monster. So if that kind of continues on the same trajectory, yeah, I mean, what else is going to derail the markets? And then, of course, earnings. Lots of earnings this week. I think it was like 58% of the S&P report. You have Amazon, Apple Thursday, Meta, Microsoft Wednesday, and then mixed amongst that is tons of other names. The Visa, the Mastercards. I can go on and on. And then you have the backdrop of deals, right? So over the weekend, with the US EU finally come to an agreement, and you kind of thought like last week, once the Japan news came out, that it was 15% baseline, you figured that was going to be kind of where things were going, and that's what came out with the US and EU. It is a little higher than what it was previously, but lower than the 35% that was being thrown out, to 45% or whatever. So um, yeah, more manageable, I guess. And then not only that, that takes away the uncertainty of all the stuff that's been going on since April. So I wouldn't say it's the last, but obviously the US EU, that's the biggest trade partner for the US. So to kind of get that ratcheted out, and now that the US and China are working out some details. And you have to think, hopefully this bodes well for the global economy, and then the market can continue to march along, right? But this is the first week, and I put on the watch list. It's like I'm not saying I'm bearish per se, but I'm kind of like cautious, right? I mean, and I've been saying this for the last 2 weeks, and one of these days, unfortunately, it's going to happen. We're going to be down 1% or so, uh, either in the pre-market or reverse one of these gaps, right? A reversal from green to red. Hopefully, that's not today. I hate gaps, but one of these days it's going to happen. So I'm a little more open to hedging, right? So a Broadcom probably, ServiceNow, put side on the hedges, inexpensive weekly ones. And then SQQ calls. And I don't have much in the way of call side either. So it's kind of sometimes it's like waiting out the choppy waters on a big storm. I can do that, but same token, I'm a trader, so I'm here to got to make money on the downside here too. But funny, here's the headlines. A market watch, always great. S&P 500 is now likely to reach 7,200 next year. And this isn't market watch, it's actually just citing, a new Morgan Stanley strategist coming out. Where were they at the April lows, right? Oh my gosh, always comes out to the highs typically. I mean, both sides do, right? You have the bearish articles, and here's the bearish side. This researcher finds eerie parallels between now and the pullback of 1998. And usually it says this one is called this this researcher called the 1998 and 2008 crisis, right? But what they're citing is the amount of margin debt, which to me, it's always like a funny number. Every time the market hits highs, people say record amount of dollars are levered, right? We have the highest amount of margin dollars on record. And it's like, okay, yeah, because it's a function of the market going higher. When the market goes higher, there's going to be more margin dollars out there, right? The market goes lower. So it's funny how that always comes out as a buzzword to kind of create fear. Oh my gosh, once the market starts selling off, it's going to be one of those snowball effects, because there's going to be margin calls. It's just going to exacerbate the sell off. But it's always been the case. There's always margin, and as the margin goes up, as stock prices go up as a function of that, margin debt goes up. But they make a nice case is that the amount of margin debt exceeds like the change in margin debt percentage, which means there's more people levered. So that's more of a data point I can kind of wrap my head around. I'm not saying I agree with it, but needless to say, I was a little cautious last week. I'm not cautious, but at some point I kept saying it. Hopefully that's not the case, right? my ideal scenario, and I've been putting on a watch list, that we chop around. Small caps take the baton for the next couple weeks or what have you, and then we can continue to march on. But for now, I updated my range, 640 to 626. We hit 640 in the pre-market on the SPY. I'll continue to adjust those, but I think it's like 3 or 4 weeks in a row. Every time I've done those SPY ranges, it's almost been spot on. I'm not here to pat myself on the back. I hope we don't get down to 626 this week, but that was a big spot last week. So, and then under that 621. Hopefully we don't get there. I put 633. That's kind of like the line in the sand for me today and tomorrow. If we do break under that, that's where I'll be starting to look for put hedges. But it's like anytime you've tried to do put hedges, those events, the Powell firing, the sell-off, was it last week where there was no catalyst? We dropped at like 9:45. We dropped $5 on the SPY. NASDAQ was down 1%. It seems like people are ready to hit the button, but we've had bounces, right? So anybody bought the puts on those, you lost money because we closed all-time highs on Friday. At some point that changes, but for now, just open to it. And then the small caps still chopping around, still underperforming the overall market. So at some point that changes as well. Also of note today, U.S. dollar stronger, the yields are lower. To me, that's a cocktail for the market strength. So hopefully that trend continues as well. All right, so now just individual names. I keep putting TikTok, and not the TikTok app, but TikTok, the ticking time bomb, or the ticking, whatever you want to call it. SERV, it's just a ticking time bomb. You see the consolidation, and it's been some big swings of consolidation. It's not like SERV is just trading in a tight range. It's been down to 10, back up to 12, over 12, back down to 10, and it's chopping around to 50 in the 200-day moving average. So, I'm biased to the upside. So at some point, 1375, that's the next target. Over that's $18. Still up SERV. JOBY closed up 5 days in a row, up another 3% on Friday, 1.8% on the week. I was just going to hold the October strikes, but the longer it stays here, I think the probability now, I thought there would be a pull on JOBY at some point, but to me, the probability is probably to the upside over 20 than it is for a downside. So if it holds the gains at the open, I might look for some closer strikes to play for that move over 20 and continue to hold the Octobers. Earnings this week. So DXCM reports after the close on Wednesday. I finally added some strikes on Friday. The plan is to lock some in if I can get some out to cover costs for 100% and ride the rest into earnings after the close Wednesday. The other option, if I can't do that, I'll just close them out and visit Thursday morning. They had news out earlier today. They launched a revolutionary AI meal eating app in conjunction with their program. I don't know if that's bullish or bearish to name, or without doing a spike, but really like the setup. It is above the upper Bollinger Band, but you can make the case it's a tight Bolly setup here. So my hope, and I think it's 9170 is from February. I have to go back. I think that's what I put on the watch list, 9170. So it gets over 9170. That's the key spot. And hopefully that happens today or tomorrow. So I don't have to sit here waiting to manage the position. And then off to the races, maybe if it gets to 93 or so, the calls will be over 100%, locks them in, cover the rest, and hold the rest in earnings. Otherwise, I'll close them out. MDB, disappointing, right? I was saying on the rant Friday afternoon, I could have just got the MDB 225s the previous week into last week. Instead, I got the weekly lottos the previous week. And then Friday, I wouldn't call it scrambling, but I got those 247.50s, able to close most of them out for some nice profits. Frustrating, but at least made some profits there. Over the 200-day moving average, I keep looking at this name as that reversal. I kept saying it's going to get back over 230. It's going to do that earnings because it went to earnings 230, great earnings, and then there's like a divisive name. Folks think it doesn't deserve the valuation. It's sold off back under $200, and then boom, I think it's like 12 days in a row to the upside. I could see it trade 260 plus. So if that's my premise, I might look to continue to try to trade this on a weekly basis. The issue is the premiums are expensive. So if I see another opportunity like I saw on Friday, maybe I'll look to get some strikes there. Reddit reports this week, so expensive. I think it's Thursday after the close. To try and trade this one this week. I mean, even for premium build, you go up to the 200 strikes. Maybe those are 50 by 71. You get them 60 cents, but that's $50 out of money, right? 33, 36% out of the money. I don't know if that risk reward jives with me. So not only that, it's volatile, so probably premiums are going to come out. So I don't want to see that to happen. So, but I'll be watching. That's Reddit. Surprised that one didn't do so well yet last week, considering Google. It's almost like you look at the chart on Reddit and it doesn't even look like there was any kind of move on that one. Other names, Align reports Wednesday have to close. Another one of those names, pricey premiums, but the day to watch, it's earnings day. And typically in the afternoon, the premiums they'll go from not much to a lot, especially out of the money. So I'll be watching that one this week as well. I was talking about on Friday, I think it was like a $14 billion market cap. The company's bought back $9 billion in stock over its publicly traded lifetime. So interesting story. TTD reports, I think it's August 7th, not this week, next week. I continue to look for opportunities to trade this one. 200-day moving average, 91 bucks. I'm not sure if I'll do weeklies or play it into next week. I'm trying to think of some Lemonade reports, not this week, next week. So continue to look for opportunities to trade that one. Still like CDLX and Edit, so I'm still holding the freebie August strike, still have the Octobers. Carlytics reports earnings next week as well. My plan is to have the August out before that happens. Not because I don't like the story, but it just, it was up 45% last week, so it held some of the gains despite closing down 9% on Friday. It's actually gapping a little bit up here. Hopefully it gets some mojo and resumes its uptrend. I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.